Not sure if you know, my friend Mr. Money TV made a video 2 months ago on why Malaysia is behind compared to Singapore, and it went viral. So much that another friend, Kelvin, also talked about it 1 month ago and it almost went viral too. Actually, they are not my real friends lah, but I also hope this video will go viral. Instead of talking about human capital development and how to improve your life, I will talk about the insurance penetration rate of Malaysia and Singapore. Before we go into it, I would appreciate if you can click on the like button, as it will help this channel to grow. And of course, click on the share button to help make this video go viral lah. In return, I will show you a map of Malaysia and Singapore. Let's get into the topic. Alright, when I first joined the insurance industry, I was told about how big the insurance market in Malaysia is, and I was dumbfounded. Japan has 700%, which means in average, each Japanese has 7 insurance policies. Singapore has 250%, which means on average, each Singaporean has 2.5 insurance policies, and in their recent MAS report, not this MAS, but Monetary Authority of Singapore Report 2020, Singapore has reached 270%. How do I know? I downloaded the statistic from their website now. Took the total number of policies in force and divide by the total number of Singapore population. Okay, by now I think some mathematicians will start to say, how can you divide like that? Some may have more than 2.7 policies and some may have none. You are right. That is why we say average lah. We are discussing insurance penetration rate and not insurance protection gap here. Perhaps we should do an episode on insurance protection gap in the future. But anyway, so far, as for Malaysia, it was reported that we only had 54% for the past 5 years. Also, if we were to eliminate those who have multiple policies, the percentage will be around 41% according to Life Insurance Association of Malaysia back in 2020. What does that mean? It simply means on average, 2 Malaysians will share 1 insurance policy, and let's not talk about the insurance protection gap, please. So why is the penetration rate so low compared to our neighbor country, Singapore? There are a few possibilities. Let's look at them and see if you agree. Disclaimer, in no way or whatsoever, I'm trying to compare, belittle or sublime any side here. This is purely for discussion purposes, okay? Now, the short form KESC stands for KESC, or in English, it means fear of losing and fear of dying. Okay, this is what people outside of Singapore and some inside Singapore always say about Singaporean lah. But in some of the Singaporean movies we watched before, it gives us the impression that Singapore is a fine country. Yes, if you don't abide by the law, you will be fined. Is that a good thing or a bad thing? To me, the good part is the country will be somehow more organized as people are abiding to the law. Some want to avoid the saman lah. Or maybe Singaporeans work so hard that they realize that their hard-earned money will be at risk if any mishap happens to them. All will be gone for medical bill, or they will not have enough money to stay alive. In my opinion, the kiasu and kiasi is not so much of fear of losing or fear of dying, but more towards fear of not getting good medical treatment and fear of not dying. Quote Mr. Money TV, the average salary for Malaysian is 804 USD, which is around 3,296 at the time when this video was recorded. Bear in mind that is average, means there are people who earn more than that, and of course there are people who earn less. How to afford getting insurance policy when you don't even have enough money to feed? Surely one will choose to survive. Of course, there are some insurance protection policies that are super affordable, for example 7 to 20 ringgit a month, but why are they not taken up? The final reason in this video will explain this. Okay, both countries have their fair share of negative stories on how insurance agents allegedly cheated their clients' money, how policy owners are not able to get what they are being promised by the insurance agent, such as claims or savings return, and so on and so forth. But in reality, we all know black sheep exists in every industry, and that is inevitable. However, how the authority deals with them is another story altogether. Whether a more stringent requirement before anyone can become an insurance agent or financial advisor is in place or not, it is very important for them to keep up with the standard so that black sheep can be lessened or eliminated. Malaysia is heading towards that direction with the introduction of the balanced scorecard back in 2018, and that has seen quite good improvement, I must say. Now, it doesn't matter whether you are KESC or the regulation is strict or not. It all boils down to each individual's financial literacy. Yes, the knowledge that we all don't learn in school, not even in college or university. Basic concepts such as compound interest, financial risk management, and etc. are not in our syllabus when we were young. During my years in the industry, I came across many interesting people, including an accountant that believed buying insurance can help him double his money in 5 years. Then of course there are some people who say things like,
"Oh, it's okay, I will not get sick or I will not die."
Or some who bought personal accident policy but complain that nothing can be claimed when cancer happened. But that is out of the point here lah. If one does not understand even the basics of finance, then two things can happen. Number one, they will be easily manipulated by others when it comes to money, making them believe that their money will grow faster and return is higher than what the banks or other investment tools can offer. Number two, they will be confused about the functions of different financial tools. Which one is for investment and which one is for protection? If one lacks financial literacy, then it is an opportunity for the black sheep. Education. Without proper education, especially financial literacy, many would have missed the opportunity to get insured even if the premium is super affordable. So there you have it, another Malaysia versus Singapore topic, and I hope all of you learned something from this video. Now you can always learn a thing or two about financial education by tuning into these 3 YouTube channels if you are not into reading lah. Number 1, Mr. Money TV, if you want a broader perspective on financial topics. Number 2, Kelvin Learns Investing, if you want to learn about investment and grow your money. And of course, last but definitely not the least, you can always tune into this channel, if you want to learn more about insurance. Until the next video, stay safe, stay healthy, and stay financially educated.